This is Larry Williams, and what a joy it is to be back here on StockCharts.com. And it's time for Halloween. Trick or treat is going to come to Wall Street. I'm going to show you a couple really nice treats coming up in the marketplace, one in gold and one in the stock market itself. So grab your pens, your pencils, your charts. Let's go. I started trading the markets way back in 1960, and the seasonal pattern back then, in other words, if you just looked at all the stock market data from 1920s into, say, 1962, when I first started getting attracted to stocks, there was a strong seasonal low in October, as there had been in 61 and 1960 and 1963, and then again in 1964. So that seasonal pattern, a lot of people know has been around a long time, but it's interesting that using data just from the 1920s into the 1960s, the seasonal pattern was there, but did it hold up? Well, here's when I started really trading actively with 1966, and you can see seasonal low right there, and the market went off to the upside. Now, to bring this up to date, if we look at data just from 1966 to 2021, in other words, we're not going to use all that data from the 20s and the 40s and the 30s and the 50s and all that. We see the same pattern. There's that October point where markets take off to the upside. You saw it here, see it again over here. Not a big rally, but nonetheless a rally. And of course, obviously, what does that look like right here, right now? Well, there it was in 2019, nice rally. There it was in 2020, nice rally, and we're coming up. So we have a very high probability here of a market move to the upside based on just seasonality. Of course, there's obviously more than seasonality, but it's interesting to me that this pattern, which existed on data from the 20s to the 60s, continues if we use data from the 60s or even from the 70s forward. That seasonal pattern, for whatever reason, is still there. Now, a lot of people argue why it's there. I'm not going to get into that. I'm a realist. It's there. That means I have a trading advantage coming up at the end of this month I want to try to take advantage of. So my mission here is to report what will happen, not what took place. I get so frustrated, especially when I first started trading. People say, well, the market broke above a 25-day moving average today. Hey, I want to know before it breaks above the moving average. So the world that I live in, the world I try to bring you into in StockCharts.com, is to report what will happen, not what took place. What took place, so what? A football team won yesterday, but I want to know before the game who's going to win. Now, if you live in my world, obviously it's not a perfect world. You're going to make mistakes from time to time. But by and large, if you look at these presentations on StockCharts.com, you see we've been pretty correct on most of these, that we can get a good glimpse of the future. We can get a pretty good idea today of what they're going to be writing about in a few days from now. That's the knowledge that a trader or an investor needs to have. Now, here's my 2021 forecast. This forecast was made last year in 2020. And the blue line is a forecast. A lot of you subscribed to that forecast report and got it. You can see what our expectation was. The expectation was that we should start to see a strong rally at the first of the year, a midpoint, a little pullback in the market in here, continuing rally, and a bull market for all year long, clearly. Remember, there's so many Cassandras that were prophesying gloom and doom and the end of the world and all that stuff. Well, of course, none of that took place. So that was a forecast. The big question is, could we really predict the future? Well, this is how it's actually turned out, and it gets very interesting right here, right now, because the way it turned out is pretty much the markets followed that general roadmap that I outlined over 1 year ago, and it says, right here, right now, get ready. It's just about time for another move to the upside. So we have more confirmation now. Remember, we looked at seasonals, which also say pretty close in here someplace there should be a buy point. And I'm going to make that very specific coming up, a very precise exact trade for you. But I like to see confirmation. Now, this natural cycle forecast has nothing to do with seasonal patterns. It doesn't look at seasonal patterns in any way whatsoever. So we have confirmation that there is a low point coming up here in October from a couple of different indicators. That's really how I like to trade. Now, if we look at the seasonal pattern from 1923 to 1920, using all the data we have, look what we get, October 29th. And typically, we've seen really strong market rallies from there. So we see a lot of confirmation using all the data, using part of the data, using my natural cycle forecast that I did over a year ago. that forecasted pretty well what the market has done and probably what we'll do. We know we're really close to what's going on in the market. We got a good view of the newspaper headlines at the end of October and the 1st of November. Now, you can also look at this in StockCharts.com because my true seasonal pattern, which is what we're looking at, my seasonal pattern is so different. It only uses the data we have. So we see what the seasonal pattern looked like at the current time. And this is the way it looks at the current time coming into the end of October. Again, we see a strong opportunity for a rally, which means, yeah, there's probably some more move to the downside in here, but a buying point, the most probable buy point on the long side is coming up, and traders need to be really ripe and prepared for that because it's not too far away. We're coming up close to this thing now. I also like to look at cycles. A lot of you know I use Timing Solution to do my cycle forecast. I like to look at a couple, 3 cycles in the marketplace. By and large, a 57-day cycle, an 88-day cycle, those seem to be the most operative cycles in the marketplace. So when I ran my cycle searches, what do I find out? Look at this. Again, right around the middle of October, 1st of November, we should move to the upside. Now, the cycles are not exact. What they tell us is there should be a buying opportunity here, a selling opportunity there. So we see we have a buying opportunity coming up in the marketplace. That's exactly what we're looking for in the market, is to see that type of action in the market, something that confirms from a variety of techniques that we have an opportunity, a bias in the marketplace. The market still may not go up at the end of this month. We're going to get specific rules for that in a moment. But what I like to play cards with a stacked deck and even a marked deck. I want every advantage in my favor. So what I'm showing you here is one of the trades of the year where we really have a lot of stuff going in our favor. Seasonal cycles. That's really this is how you make money trading, guys. I've been doing this since 1962. So you gotta have the dice loaded. Trade confirmation. It's not just enough to have one indicator cross another indicator to really be a successful trader. I want confirmation, like, yeah, this looks good. Oh, and that adds to it. It's like, you order a slice of cake, you want frosting on it, you want whipped cream on it, you want ice cream on it, you want a candle on it, then you really have a nice birthday cake or birthday dessert, right? That's what you have to do with trading, not just one indicator, just not one thing. We want to add, so we have a culmination of things here giving us an advantage. So how do we load the dice? I'm going to get back to specific trades in a moment, but I love to teach trading. And I want to teach you tools you can confirm your trades with. You can use cycles, as I pointed out. I like to use professional buying. We're going to look at that today as well for the stock market as well as gold. There is smart money in the marketplace. I absolutely believe that. I know some of these people. I've seen them trade. So I'm not as smart as they are, but if I can find out what they're doing, I can follow what they're doing, right? Business conditions are also important, especially for the stock market. Is the economy good now or bad now? Is it mixed now? I'm going to answer those questions for you. Unemployment, I think, is huge, or employment, as a driving force of the markets. This is just one of the very best indicators. We just got some new data on that. We'll be looking at that shortly as well. And obviously, interest rates really affect stock prices. There's a great song by Hank Williams Jr., a country western singer. He said, interest is rate, stock market's down, you only get mugged when you go downtown. And that's historically been true. When interests are high, stock markets get moving to the downside. Interest is up, stock market's down. It's about all you need to know about economics right there in that cowboy song. So we also want to look at interest rates as a driving force. I like to look at one way we can do it in StockCharts is my money flow index, which is really a measure of smart money buying, professional accumulation in the market. You've seen me use this over the years at StockCharts.com. So some of you were watching when we got bullish back here and got bullish back here, or it rose into the bullish area over here. And recently it's just gotten back into the bullish area, and we're real close to it now. We're flirting in that area where a lot of good money has come into this market, professional money on the long side. And that's exactly what we like to see. We like to see somebody else smarter than we are buying the market. And it looks like they've started to accumulate stocks to the upside. I'll go back in time. You can see a little bit better picture. I'm looking at it now on a longer term time frame. You can see how important this is. They're buying, they're buying, they're buying, they're buying. We're close this on a weekly basis now. We're close to it. So those of you who have my stuff on StockCharts.com, you really want to watch the money flow index on a weekly basis. We are getting close to being in the buy point, which would be more trade confirmation. I also like to look at valuations. I think fundamentals really drive the markets. That's what really moves the marketplace to the upside is fundamental conditions. So we have a fundamental measure of stock market and what's undervalued when we're down here. It's not oversold or overbought. It's not like that. Notice prices were really high up here, but we were undervalued and the market took off to the upside. Over here, we didn't see any big declines and we were undervalued. In fact, here, look, we're in a straight uptrend and the market was undervalued. So it's not a timing tool. Valuation says, whoa, we're in an area where there's some good value here and we've got a rally coming in. That's where we are right here, right now. That's exactly where we are in that area where we would expect the market to start to rally in here based on valuation. So it just then becomes a question of timing when we're going to get into this thing. And we're going to talk a little bit more about that, of course. My Paunch buy signal, we've talked about that before. That's interesting. When this particular index gets above 40, that's what the hell you need to know. You're close to a market bottom, as we were back here in 2018. So where are we now? Well, the last Paunch buy signal is over here. We need the market declining and we need our Paunch index to get above 40. Perfect buy signal. Well, we started to come up. So again, on a weekly basis, you'll be wanting to watch this indicator. It gets above 40, we're going to be really close to the bottom. It may not get there, but if it does, that simply gives us a lot more confirmation of what's going on in the marketplace, which is really what we're looking for. So trick or treat time. Let me give you some trick or treat trades here. These are some of the strongest, most powerful trades that you have in the market. I think I'm going to really like these a great deal. Here we go. If you buy on the 22nd trading day of the month, not calendar day now, the trading day of the month, right? There's the difference, not October 22nd, but the 22nd trading day of the month. You've done pretty doggone well in the last 18 years. That trade has always been a winner. I'm using a $2,200 stop here. I'm going to hold the trade for 3 days, made about $16,000 profits. So that's, as we have talked about several times on these StockCharts.com reports, and we've talked about the seasonal pattern earlier, that tends to be a pretty doggone good time when we can expect stocks to rally, and we see how we can specifically apply that around the 22nd trading day of October. However, we have a problem this year. The problem is October doesn't always have 22 trading days. And this year is an example of it. This year, October only has 21 trading days. So is there another way we can take advantage of this trade? There is. I'd like to share that with you. The first trading day of November, we're always going to have a first trading day of November. Every month starts with the first trading day, right? So we can have application to that to see where we are. And if we look at that, buying on the first trading day of November in the last, you're seeing that correctly, 31 trades, 31 years, 31 winners, $18,000 profits, using a $2,400 stop and a 2-day hold. Now, you know, this might be a real short-term trade, too short-term for some of you. That's not the point here. The point here is I'm showing you a high probability short-term trade that the market starts to move and you can probably start to meld this into an even longer-term trade. What we see is a very high probability. You don't find numbers like this every day or every month in the S&P. So we see we have a very strong pattern here, one that we're definitely going to want to take advantage of coming up the very end of this month, the very first part of November. We definitely want to be looking at this market on the long side. That's where the money is going to be made because that's where the money has been made in the past in these markets. Let's go back. If you hold that with a 6-day hold, we'll make, whoa, look at that, $42,000 profits. In other words, this trade has legs to it. It has a lot of legs to it. 31 trades, 30 winners using a $2,400 stop and holding it for 6 days. So clearly we have a seasonal cyclical buy point coming up here. You might want to buy the day before, 2 days before. You're going to look at the market and make that judgment call yourself. What I'm able to do is show you, oh, look, we've got something coming up. Now, as a trader, I have to try to take advantage of this insight I have to the markets. And that's what you have to do as well. But clearly, you want to be looking at those charts at the end of October and the first part of November. I got this email this week. I thought you'd enjoy this. I don't normally get too nervous about stocks, but considering we have the most incompetent president in the history, I am worried. Not sure how the country is going to survive another 3.5 years of this senile idiot. Well, let me tell you something, guys and gals. Here's a quotation to live by. 90% of the people think they understand the market, and 90% of the people rely on the news. That's not good. What you need to know, this is purely a mental business, but it's ruled by emotions. So when you get upset with Donald Trump or Joe Biden or President Nixon or Bill Clinton or Obama or the Bushes or whoever, you know what? You're off track. This is a mental game, but your emotions, because you read the news, you have a political bias, left wing, right wing, whatever your bias is, those biases creep into your mental process. So if you want to be a good trader, you don't have those emotional stuff going on. You have to maintain that this is a mental business and you have to act according. This is a mental business. You got to watch out for emotions. What you need to do is train your mind to overcome your emotions. That's a critical part to becoming a successful trader. Sure, we've got other parts. Money management, critical. Knowing when the market is going to do things, good technical tools, that's critical. Understanding fundamental, that's critical. You need a combination of ingredients here, and one of those is just your own mindset. Like, forget. I remember, and when I started trading in 1966, I was in a brokerage firm, and these two old guys were there. Oh, the world's gonna fall apart. The deficit. Yeah, we're gonna have another depression. That didn't happen. 60 years later, almost 60 years later, it hasn't happened. So the Cassandras are always out there prophesying gloom and doom. Given a choice of two disasters, they want them both. You have to be careful of that. You have to look at some fundamental data too. You need to train your mind to overcome your emotions. So the big question is, how do you do that? Study the past. That's the biggest thing. Don't study the news, study the past, prove this stuff to yourself, and never invest or bet beyond your emotional control. That's the number one problem with money management. People don't understand money management is really emotional management. The larger your bet is, the more emotional you're going to get in the marketplace, and that's going to be really hard on you. So your emotions are going to be influenced by the size of your bet. You just got to always keep that in mind. So bet small and you'll be in a whole lot better shape. Okay, trick or treat, 2021, will it happen this year? Are the fundamentals bad? Is there something offsetting it? Yeah, here's something that is negative, inflation. There's a chart of inflation going all the way back to 1950. These gray dashed lines, they're recessions, when we've had recessions. And when have we usually had recessions? When inflation is above 5%. Look at that. Pretty darn good indicator, isn't it? So that's an alert right now. We've seen a lot of inflation. This could be a real problem. Of course, you know me, I like to have more than one indicator. So let's look at some others. I think people matter. I think jobs matter, because if we look at recessions, clearly, again, we see those gray lines are recessions. Every single recession we've seen an uptick in unemployment. Look at that. Boom, boom, boom. So that to me is the most driving force. There's a lot of ways we can look at jobs. One is temporary help services. When temporary help service starts to roll over, as it did in 2000, recession. As it did in 2006, 2007, recession, bear market. Recessions mean bear markets. That's why recession is so critical. The very best indicator I have ever found to call bear markets recessions. So we want to really watch temporary help services here. You can see the relationship. Here's the stock market in red, and there's temporary help service. As soon as they turned up last year, whoa, away went stocks. So where are we now? What does this indicator look like right here, right now? And there it is, you can see for yourself. We're a long way from getting down into this negative area. This is a year-over-year rate of change. When we start to get a negative rate of change, that's when the recessions have set in. Even before the COVID crash last year, we'd turn negative. Well, we're a long way from doing that now. So I think that offsets the inflation. We have a problem with inflation, without a doubt. but we need to see a little weakness in the employment and the economy before this stuff is all going to really kick in. So bear market, nope, not here, not yet. We still have good times coming. Median income is another interesting thing you should watch for, because if people have a lot of money and if they have jobs, they buy stuff. If they buy stuff, corporations make money and corporations are happy and they have profits. So that's really the bottom line of economics. Well, what about median income? Look what happened to the last recessions we've seen. Median income dipped, oh, recession. Median income dips, recession. A quarter later, it dips, a recession. So it's another indicator you can watch for. But right now, we've had one dip. Oh, if we get another month dip, that would be negative, but one dip doesn't make a recession alone, but it's cautionary. So these things we have to be looking at, and I obviously do look at it. You can look at it for free. It's on the Federal Reserve website, so you can see everything there that you want to. Well, let's go back in time a little bit. I'd like to go back to something I did on YouTube with StockCharts.com a year ago, at the first of this year. We said here are the cycles operating in the marketplace, and we'd expect a substantial low in the first part of March because we'd seen lows on the cyclical lows before. And, oh, sorry, we skipped forward too far. So there's the March projection, trying to figure out what the newspapers will say in March, right? And here's what actually happened. There's the first week of March, and you can see what took place. So we can get a good glimpse of the future using cycle forecasts and all these things we've been talking about. And by the way, you people that are watching us on StockCharts.com, this is great because you guys make comments. Some you don't like, but that's fine. This is the stocks is a two-way street. There's bullish people and bearish people, but people posted some really glowing comments. I appreciate those. Some negative ones, those are good too. A couple of you raised some really good points, things I hadn't considered. So it's been kind of a nice dialogue to get back and forth there. So if you want to post something on YouTube, I will do my best to answer the YouTube postings. Well, here's another forecast we also had at the first of the year using fundamentals. The blue line is simply interest rates pushed forward 110 weeks. And that suggested that the market should move something like that in the coming year. So does this stuff really work? Can you really get yesterday's newspaper, tomorrow's newspaper today? Well, there's that little dip that you saw in the first part of the year, right? You just saw that. We'll go back one slide. That was right here. And that's right here. And look what happened. Not only that, look what it suggests now. Oh, a bit of a down move, but then we start to move back to the upside. Another reason that I think we have a high probability, a higher probability trade coming up with that seasonal pattern that we saw that we should have at the end of this year, that we see a lot of stuff coming together here for us. Okay, my 2022 forecast, a lot of people have asked about that. I'm working on it. It's about done. We'll release it January 1st. I hope we'll do a StockCharts.com show on it like we did last year as well, giving an idea what's coming. You can sign up for it at my website, ireallytrade.com. Okay, another important thing is how's business? Can business support a stock market? Well, here's the general business conditions. And again, we see that when general business conditions get bad, like they did in 2008 or 2000, stocks go down. But look where we are now. General business conditions are up. So the person who thinks Joe Biden is an idiot or Donald Trump, whatever, doesn't matter. Here's reality, guys. Business conditions are good. That's bullish for stock prices. In fact, here's GDP. GDP, because of the rate of change, has just gone through the roof here. Again, it's nothing in the fundamental data other than inflation that suggests we might have some troubles coming ahead. And inflation can be an early indicator, certainly something we want to watch. If you're really worried about the economy, you can look at the Federal Reserve leading index. It's still bullish. Look at this. It's way up here. It's still bullish in the marketplace. We see what happens in recessions. It's always coming down before recession. Well, not now. So we see a lot of economic stuff in here that is bullish, despite what the purveyors of pessimism are saying. There's a good reason to think that the traditional, typical year-end rally that we usually see most likely we'll have seen at the end of this year. Here's an example of how this stuff works. This is Merck. My wife owns some Merck, so full disclosure here. Notice how as Merck was coming down in here, we start to see accumulation comes into the market. There's diversions, lower price, but professionals were starting to buy the market. And this is the cycle forecast also suggests we should see a low in here and a rally in here. Clearly, there's a big gap in here. Looks like a great place for Merck to fill that and come to the upside. But you can see how this stuff works. Actually, these things do work. Here we look at the true seasonal pattern right here. Oh, Merck's rallying when it should rally, right? The measure of number of advisors that are bullish or bearish, they were all very bearish right here. And then they got all too bullish. The market pulled back a little bit. So indicators really work if you understand them. Now, if this is a new concept to you, we've done some StockCharts.com videos on indicators, how to use indicators. Watch those. I think you'll learn a lot from watching those. A lot of good information there. The indicators, most people, what I found is most people have too many indicators in their charts. They don't realize that each one should have a specific purpose. Here's Merck. You can see the professional buying. Look, they're buying here just before it took off. Same thing we saw back there. So most people are looking up here on charts. This is the wrong thing to do. Don't look at the chart. People try to read it. Look at what drives charts. That's what you really want to pay attention to. See the same thing here. There's a Paunch index we talked about getting above 40 and Merck took off to the upside. Okay, here it comes. Trick or treat for gold. Commercials have been buying gold. The public has turned bearish. And in terms of times, it's about time for gold to rally. Let me show you what's going on here. The red line is commercials buying the marketplace. Notice for the big run up, whoo, commercials did a lot of buying. In this trading range, the commercial were big buyers and we got a big rally. Well, commercials in this flat trading range we've seen have been buying all the way. That's positive. This is smart money. If we look at silver, commercial buying is red and open interest is in black. Pretty much the same thing. Look at that. Commercials have been buying while open interest, everybody else has been getting out of the market. In the past, when that happened, April of this year, commercials are buying, everybody's getting out of the market. Go look at what happened in April, big rally. Same thing happened here in April 2019. So we see some indications that commercials have started to buy in the precious metal markets. That's bullish. The public on the other side, the small specs, that's the green line. These are actual buys and sells records from the small speculator traders. These guys are very bearish in the market. They were very bearish in the market here. They were very bearish here. They're really bearish here. So, wow, I like that. The public has finally given up the ghost on gold. They've lost the faith. Great. I'm really interested in getting long gold in here. And in terms of cycles, it's about time. Looks like we're in a cyclical advance. It should go into the first part of November, a pullback and another buying opportunity in late November. There's been a pretty nice cycle low that we see, and we're in this up phase of the cyclical low now with another buy point coming sometime in October. So we're getting pretty close to this. Isn't that nice that we can look at three ways and say, look, we've seen commercials buying, professionals buying the market, commercial buying, public turn bearish, and it's about time. That's trade confirmation. That's what sets up trades for us. And in that fashion, we can really see exactly what's going on in the marketplace. It's about time. And a final treat for you, here's a forecast for the E-minis. The red line looks like about what stocks do, right? Well, that's actually a forecast. That red line is known about 3 months in advance. And look what it's telling us right now. A little more down move, then back to the upside of the marketplace. So we've got a lot of reasons to be looking for that sweet spot, that trick or treat in October. So from here at ireallytrade.com, this is Larry Williams wishing you a very happy Halloween and good luck and good trading to all of you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.